interesting and I think very important set of topics around how to really catalyze, utilize various types of capital for social good. So I'm just the moderator, right? It's a topic that is very near and dear to me, having spent 2 decades in this space on different facets of it, from working with non-for-profits driving social change, to working with investment, development finance institutions, working in CSR. So while I take a step back, I want you to know that I'm also itching to just learn more and hear more from you all. And I think my esteemed panel here, in the last couple of days that we've been preparing for this session, I think would share their enthusiasm as well and recognize that you're also the experts in the room. So I'm going to introduce my panel. We have about an hour. So we're going to talk about some things that we think relates to the topic that was given and things that we think are useful for you. But we're going to spend most of the time getting your questions to us. Okay. So when I heard my colleague's name, I thought, oh, wow, Jill Bates. Okay. So I have Jill Bates on my right, and next to her, I have Joan Larrera. Now, Jill is the CEO of CAF, which some of you might know, the Charities Aid Foundation, and she really brings a wealth of experience on both, foundations, CSR, philanthropy, and while her organization operates in the Southern Africa space, she obviously has a wider kind of geographic realm in Africa that she's been working on. And Joan comes to us with a lot of really interesting experience in blended finance instruments, catalytic funding. She's worked for the likes of the US OPIC, Overseas Private Investment Corporation, before that with the IFC, the International Finance Corporation, and right now heads a Toronto-based entity called Convergence, and they really look to again, drive some of these interesting funding models, very innovative solutions to finance social change. Now, unfortunately, we just heard that our other friend, Mankone, who is just remarkable. She has experience from the Kagiso Trust here. And Kagiso, for the South Africans or the Southern Africans, really converges a lot of the work in development. She's had, I believe, a personal setback, so she just, at the last minute, couldn't make it. Okay, so the panel is a duet, but a very, I think, dynamic duo, and we're really looking to you to help to drive this panel and make it useful. So I see a couple of faces that I know, and I know some of you because of the conferences that we go to. And, when we go to these conferences and you sit in panels and you think, oh, that was so dull, oh, I didn't get to ask my question. Well, I think we're intimate enough that we should get at least half of you satisfied with that one question that you had. So let's get started. Please engage. Let's make this worth our time. Now, to sort of, bios, people can read bios. If you're on WOVA, you've probably seen their experiences. I would like to ask you, I'll ask you first, Jill, just in a story-like way, tell the group something about what you do at CAF that you absolutely think rocks, right? That just stirs your world at CAF.
Well, Micheline, thank you. Thank you very much. It's a lovely question, and a very good afternoon, colleagues. I'm very glad to see that you're here after lunch. It's a tricky slot, so well done. You've made it, and as Micheline said, I hope we can have a great discussion. I'm the CEO of Charities Aid Foundation Southern Africa. We're a registered non-profit organization with public benefit status, And the absolutely wonderful thing about CAPSA is that CAPSA is an intermediary between the world of philanthropy and civil society. And that, aside from being a moderator, I think is one of the best jobs in the world to have. So we have both corporate clients, and we offer a number of programs. We do CSR policy and strategy. We run payroll giving programs, volunteering programs. And then, of course, we have our non-profit clients, and we help them with due diligence and help them access funding from corporate. So it's a wonderful space to be in. And as Micheline has said, that CAPSA is part of a global alliance. So we are headquartered in the UK. We have a presence in America, in Canada, India, Russia, Brazil, and we also have a presence in Bulgaria and Australia. And the wonderful thing about being part of a global alliance is that while we work in a very indigenous way in Southern Africa, we also have access to best policy, strategy, research, case studies. And I think that really deepens and enriches our practice, and we can take those international learnings and apply them to CAPSA. And I think one story that I wanted to share, if I may, Micheline, is a very recent initiative that we ran with a corporate client, talking about innovative solutions. The corporate client gave us the brief to say, we've got 100 nonprofits that we engage with on a CSI level. But the world is changing. The nonprofit sector is highly overtraded. It's highly competitive. There's a pressure for diminishing resources. We're all chasing the same resources. And this corporate said, we've got to change the way we relate. We've got to change the way we see each other and how we do business. And this speaks really to the rise of the fourth sector, and that is social enterprises. So it's making profit for good causes. And the corporate said to us, design a 2-day symposium, invite 100 nonprofit organizations, particularly those that are led by young people, those people under 30. Let's have a 2-day masterclass and let us help these organizations actually move from being so-called charity into social enterprises where they can access the supply chain of the company. So that was such an exciting program. We didn't know whether to be delighted or terrified. I think we were a little bit of both. And we managed to put a program together that took the group of attendees through the theory of supply chain, governance, legal, compliance. And then there was a section in terms of applying the theory to practice, where we got organizations to work in groups, to create a new organization, and to put in a tender to solve a problem in Africa. And it was quite incredible, the quality that we got from that exercise. And the next round of the program, because it's been so successful, is that these nonprofits are now going to be literally tendering for the corporate supply chain and procurement. So that's a good news story, and I'm so delighted to be able to share that with you.
That's fantastic. Thank you for sharing that. What's your story, Joan?
Well, we'll get into it in a little bit more detail, I think, in a moment. But what's really exciting about my job as CEO of Convergence is actually embedded in the name itself. Convergence is the global network for blended finance, and we'll get into what blended finance is in a moment. But we have 240 member institutions at this point. And the wonderful thing is they come from across the spectrum of capital. We have philanthropic organizations, development agencies, development banks like IFC, where both you and I have some roots. The city banks and the Standard Chartered banks of the world, the private equity firms of the world, and they're all members and they're all converging upon this space called blended finance. And it's wonderful to be in that position of silo busting, of getting disparate backgrounds, organizations from disparate backgrounds into the room together, working toward investing in common things. Some of them are investing for impact, some of them are investing for sheer financial returns, but there are a lot of ways to work together in really powerful ways. So it's a little bit like your story, Jill. I think you'll hear some resonance there.
Absolutely. And the good thing about having you both is that I see that you might be on two sides of the same coin, and I'm going to segue, I think, into that area with a question around, to you, Jill, how do you bridge that gap between what investors want in terms of financial and social, sometimes even, environmental returns, but really coming at it from a financial first or a commercial orientation. So bridging that gap with them and, say, the enterprises, a lot of times it's the NGOs, who are certainly more socially oriented. How do you bring it together so you can maybe walk over to her office and say, I've got something really good for you?
I think it's a lovely question, Micheline, and I think historically commercialism and non-profits have near the twain ever met. And as you say, now they are converging, and quite rightly so. And it makes me think of a project that's been initiated by CAF in the UK. And as I said, we take learnings from abroad and try wherever possible to apply them to South Africa. And this is an initiative that supports social enterprises and NGOs with affordable finance. It's an initiative called Venturesome. It was launched in the UK in London in the year 22, so it's been going for about 18 years. And effectively what this offering is, it brings together investors who want a return on their investment, obviously, and it brings together the social sector that need the investment. And the great thing about this is that CAF UK has been going for 90 years, and since the initiation of this program, some 560 high-impact social investments have been made. So why it's attractive to investors is that they get a small return on investment. The interest rate is about 6.5%. It's a very attractive investment opportunity for them. There's a lot of choice. There's a wide range of social issues that can get supported. And CAF does the due diligence and manages the entire program. And social enterprises, it's very attractive for them because typically they do not have assets that can be leveraged in terms of interest rates and banks, etc. So it's your perfect storm, it's your sweet spot, if you will. And two initiatives that I wanted to share with you that have benefited from this. One is an initiative called St. Mungo's, which works with homeless people living on the streets in London. And this investment has helped, in the first year, 500 people move from the streets into more stable accommodation and ultimately into employment. So the investor got repaid after the 3-year period, and some homeless people were moved into stable accommodation and along a continuum. So that was one of the successes. The other one is, would you believe, a coffee roasting business that was started to benefit, again, homeless and unemployed people. And with the investment from Venturesome, a number of small initiatives have gotten off the ground. And to this day, some of the coffee blenders and the coffee beans are sold at Sainsbury's. So it's been quite an incredible transformation. So we are looking to replicate those learnings in South Africa as well.
And it sounds like you have a wide range of things that you can sort of bring to the table.
Absolutely.
I'm wondering, maybe first a general question, what's in your lens when you're looking to make a decision about what to fund? And then I'll get into some specifics of the structuring of your financial instruments.
Right. So let me back up a moment if I could. So Convergence, by and large, does not invest. We exist to help everyone else invest. There's a small side comment there that we do have a small grant program, which I'll come to. But let me just give you a sense of where we come from and why we exist. So the origin story of Convergence is pretty simple. In 2015, the SDGs were rolled out, the global goals. And all the smart people that were present came up with these beautiful 17 goals and 169 objectives. And then they put a price tag on them, which is about 3.9 trillion. Yesterday somebody said billion. It's trillion, folks, trillions. About 3.9 trillion a year has to go into reaching these goals, all the way from now until 2030. Every year we need to find that much money if we're going to hit these goals, and most of that money has to go into the nations of Africa and Latin America and places other than the developed world. And then all these smart people continued to talk about this, and then they said, well, what's the gap? Well, the gap is 2.5 trillion. And then they all looked at each other and said, well, what are our budgets? And all of the official development aid on the planet gets you to 140 billion a year with a B. Wrong number. And if you look at all the philanthropic money in the world, you can't do it either, folks. That's another 40 or so billion, including Mr. Gates's money. So where is that money going to come from? The only answer there is the private sector. The private sector operates in the trillions. There's probably $1 trillion that trades hands every day in the capital markets. There are probably 200 or 300 trillion of financial assets, the stock of financial assets on the planet. So if we don't involve the hard return-seeking private sector in this problem set, we do not have a solution. So I just want to go back a step, and why do we exist?
Yeah.
So all these smart people in the room said, okay, we have to involve the private sector. Maybe we should have invited them to the party. And the question was, well, how do you get JP Morgan or Standard Bank of South Africa, how do you get them to invest? And the answer has to be you have to serve them up something they understand that has the return profile they need, the tenor they need, something that's familiar to them, yet is education, health, infrastructure, renewables, climate change related. And that's where the idea of blended finance came about. The question is, well, maybe if we steer some philanthropic money, some official development aid into transactions to de-risk them, to take away the early stage risk or the bottom tranche risk, we might be able to come up with something investable. So our vision at Convergence is to make the SDGs investable. So if you are to have impact as philanthropists, I would urge you to really think about taking some of your funding and figuring out how to play with the Morgan Stanleys or your local equivalent, and how to construct transactions that appeal to them, so that for every $1 or rand or shilling you are putting out the door, there are another 5 rands or dollars or shillings matching it. And they don't have to have the same religion. Not everybody in the transaction has to actually care about the impact that your dollar is buying. They may care about something fundamentally different, but their money is present, and you really don't care what they care about. You care about your impact. So that's the origin story of Convergence. What we're trying to do right now is to make sure that you have the data on where everything is happening, who's doing it, what it looks like. You have the market intelligence to understand what other transactions have looked like, how long they've taken to get to market, who's done them. So it's data, it's market intelligence. And the third thing we do is actually create opportunities for the money and the deals to meet each other. We have a matchmaking platform where we encourage, some of the work you're doing is exactly what we would like to see more of happening, where the money and the needs come together in a form that everybody can understand. So I wanted to take a step back and explain who we are and why we exist. We are a small actor, but a very powerful actor because we are operating at that convergence of interests. And if any of you listened to the previous panel where Norman Oyo was speaking, you need to hear that voice more often in this room. You need to hear that enthusiasm of the private sector for doing the right thing. And again, they're not necessarily impact investors, but they get totally excited about creating job opportunities and entrepreneurship opportunities. And you can make use of that energy and that passion and that intelligence in your work. So thank you. I wanted to get off topic for a minute and get there because it's really important.
Yeah, no, I would have stopped you if I thought it wasn't relevant, but that's super helpful. And maybe let me stick with you and ask you just tangibly at Convergence, right? I read, I think, hot off the press, a partnership that addresses agribusiness with the likes of Fafina, IDH, and I was trying to understand, because you hear about partnerships all the time, so what was your role specifically? So maybe to that, consortium or to another partnership, bring it home a bit, sort of more tangibly in terms of what your role was and maybe what kinds of impacts you had.
Right, so I mentioned a little bit ago that we have a small grant window. And on a quarterly basis, we look at transactions that come to us, and we don't invest in the transaction, we invest in the team trying to get the transaction to the point where it can seek financing. Okay. And we try to select transactions that ought to exist in Mother Nature, but don't. They are blended finance transactions. They have an element of concessional capital that's in the equation to draw in private sector capital at scale. And we're not trying to solve for $1 million. We're trying to solve for 100 million, 500 million. We're really going for gusto in this program. So our design funding program invites applications from people who are trying to construct blended finance transactions that could move private sector money at scale. One of the ones that came in the door was from IDH, an African Development Bank. And to be clear, we're not financing the African Development Bank. They have a lot more money than we do. We're financing this small nonprofit called IDH, which, along with African Development Bank, is creating a platform. African Development Bank is in the habit of lending $50 million at a time to large agribusiness firms. This is going to allow them to operate in that missing middle of $1 million where they are reaching SMEs in the ag value chain in sub-Saharan Africa, and have a technical assistance sidecar that's donor-funded that will be supporting those small businesses who will be borrowing not only from African Development Bank, but from private sector money that's being invited to join in a syndication with African Development Bank. So what we did was finance the work, and what we are going to do, is to finance the work that will get this to an investable stage. But that's an example of a development bank with concessional capital working on a problem. There are all sorts of examples out there where philanthropic money has done something similar. There's something, and we were not a part of this, but as part of our data collection exercise, we were aware of 350 of these deals, more or less. One example I can share with you that was more philanthropic was called the Shared Interest Initiative. In 1994, when the apartheid era was, as a result of the apartheid, the boycotts in the U.S., everybody in the U.S. who was interested in this subject wanted to participate in supporting South Africa post-apartheid. So this Shared Interest Initiative essentially allowed individuals in the United States to put their money into a deposit-seeking account and just earn interest on it. Now, this is financially inefficient, but it worked. Put their money in a safe place, but on the strength of that deposit, this firm, this Shared Interest Initiative, was able to obtain guarantees and do local lending into Southern Africa. Now, if anything had gone wrong, their money would have been called, but as is, most of that money, or all of it, just sat in deposit-seeking accounts. And these American individual investors, philanthropists, could also return the interest they were earning as part of a charitable donation. And this got a lot of money flowing into the Southern African economy. Another example is something called Metad. We were talking about coffee, so here we go with coffee again. In Ethiopia, there's a firm called Renew, which is a member of ours, which is locally based, but again, it's an American couple who's been in Ethiopia for a very long time. And they have created a community of angel investors back in New Jersey and New York and Massachusetts who are all now passionate about Ethiopia. And one of the investments they teed up was Metad, an Ethiopian coffee producer. And what they've done is invest in the farmers who supply the coffee to Metad to bring up their quality to an extent where you can actually get a premium for this coffee. Now this is a recognized premium coffee. Metad is a commercial company, hiring people, doing what normal private sector companies do, but it got its start with philanthropic and angel investing. So there are all sorts of examples out there of where philanthropic money, instead of just going in pure form into something, can go en route through a company, through a commercial endeavor, and magnify its impact.
You took me to a direction that I didn't know I was going to go right now, but I'll allow myself to go there. If you read about what's happening in Africa now, right? The traditional donor spaces, fine, from post-independence for many countries, or just around the 60s, into some of the I'd call it the DFIs, then the CSR. There was this whole wave in the 90s, 2000s, lots of funding from there, and foundations, and now increasingly, say, the VCs, PEs looking at impact. Question to you both: what is the role for the new high net worths in Africa, the philanthropists, the individuals in this space, that despite the large, say, funding gap that you articulated, say, for the SDGs, is a space that seems crowded? Specifically, if I'm a new African millionaire, billionaire, and I just want to get in, any advice as to sort of how to do that?
Okay, well, shall I start? And it speaks to some research that, in fact, CAF has released last year. And clearly there is a rise of high net worth individuals globally, but particularly in Africa, which is really pleasing for us to see. And our researchers and our actuaries have done a study which says that by the year 2030, some 2.6 billion people will join the middle class. Now, if we extrapolate that to the current generosity movement that is throughout the world, if the giving behaviors continue as they have done into the high net worth individual group, an excess of $350 million per annum will be generated for civil society. So that really is a game changer. That talks to your numbers, Joan, and it's really the possibilities are absolutely incredible. And if I can just share a little bit about the research, it's called the World Giving Index. It came out late last year, and this is a study, it's a snapshot that measures generosity behaviors throughout the globe. So there are 3 generosity behaviors that it targets specifically. The first one is giving money to a non-profit. The second one is volunteering at a non-profit organization. And the third one is helping a stranger. So 139 countries were surveyed, the top economies in the world, the US, Europe, etc. The results were absolutely mind-boggling. And I'm happy to say that Africa outperformed its global counterparts. Africa stood head and shoulders above all the other countries for generosity behaviors. And these results actually really now call into question the relationship between wealth and generosity, because typically we would be the weaker economies, but we are more generous. And I think, those of us that are African here, we know that Africa is fundamentally a generous continent. We're a continent of givers. There's the spirit of Ubuntu. And in fact, in Sierra Leone, that is war-torn, that is ravaged by disaster, that is the country where you are most likely to be helped by a stranger. Myanmar, again, also transition from military rule to civilian rule, devastating, humanitarian disasters. They are number 1 in the world in terms of giving money to charity. So again, we're looking at that and we're wondering how that could be. And again, it's the spirit of Ubuntu. And we also think it's the faith, the Buddhist faith that governs the country is impacting on those results. So I think these results bode very, very well for Africa, and the rise of the middle class also bodes extremely well for philanthropy.
No, thanks for that. And I mean, it's so cool to have a job where you can do things like a generosity research, I would love to hear if you have anything else to add, because I still sit here and I think, 20 years, those SDGs are still there. We've still got abysmal health, conditions. We have, we're in the darkness, I tell people, if our power, issues are alarming, education, etc. So how, let me focus on the philanthropists, the high net worths. Do you have a way to guide them as to what are the gaps or what are the high impact things that they should be doing?
I'm wary of parachuting into Africa as a North American and telling you what to do. I think that's probably a really bad approach. I've been listening really hard for the past day or so, and you all sound like my parents, education, education, education. So that's familiar to me as an immigrant American. I listen to that emphasis on education, and I get it. I do worry, though, that you're going to untangle one knot in the experience of the youth of Africa, which is the big issue. And they're going to run into the next knot in the rope, which is employment. So one thought, it's not a recommendation. I cannot make recommendations in this forum. But one thought is, if you think ahead, and let's say we conquer the education issue, we need to be thinking now about what do you do with the youth that you've now educated. And it strikes me that no government in the world has ever created employment. Maybe temporarily, maybe in a communist society that eventually becomes capitalist like China, but not really. It's the private sector that creates employment. So if you are trying to untangle the next knot in the rope, I would suggest that philanthropists have a role to play in stimulating the growth of SMEs. And lack of access to finance is an enormous issue in every country in the world that's growing rapidly, because you don't have, collateral, thank you. You don't have collateral, you don't have track record, you don't have banks who understand how to assess the credit value, the credit quality of SMEs. So if you think about that problem, you can, as philanthropists, be involved in, say, SME funds and venture capital funds in the first tier, in a first loss position, in a not return-seeking mode. That can attract large amounts of other people's money, which is really precious stuff. Other people's money is the name of the game. If you can attract that, money into a larger aggregated pool, you've done an enormous service to the economy by not operating alone with your philanthropic money, but using it as the lure to go into a large aggregated structure that can pull in lots of commercial money into, say, SME finance, into venture capital, into whatever it is. So I think thinking ahead to job creation that's not manual, but that's knowledge-based and that's correct for your economy is going to be an important part of the equation. And I hope that didn't come off as a recommendation. It's just a thought.
No. Ask for some guidance. I mean, you're sitting on top of a lot of.
All I know is I've never seen another government in another region ever create the jobs that your kids need. Yeah. So take it from the rest of the world. It's not government's strong suit.
Okay, this is where it gets good. It gets better. Hopefully, it's been good. Opening to the floor, right? I think that we've got a system going with mics coming around. Please ask the things that have been on your mind. There's one over here. So what I'm going to do is I'll take 5 questions at a time. Please be succinct. Then we get lots of questions in. Go ahead.
Thank you. My name is Veram Shan. I'm from the Ford Foundation. So I'm nodding aggressively at this table, especially what the last speaker said, and I think our table here was very excited as well because I think we all agree.
We heard the murmuring. Yes.
So my question though is for CAFSA, and it's about the point you made about the example you gave about NGOs being able to transition to social enterprise. So my question there is what kinds of NGOs are best suited for that? So my sense is that it's mostly service delivery-oriented NGOs and not necessarily the policy-oriented ones. And in that case, how do we sustainably or use blended finance to invest in policy-oriented NGOs, which one might be politically sensitive and so therefore not attractive to business, but are absolutely addressing the kind of critical public policy questions that CSOs are designed to do. So I'm curious about how you both would respond to that.
Okay, let's keep a flow, take note. Some over there.
Hi, my name is Frank. So we fundraise both from Africa and the US, and we struggle big time to fundraise from Africa. And the penny dropped for us a couple of years back when we realized that in Africa, you generally fundraise from income. In the US, it's mainly from wealth. When you're talking about the big gifts. As poor as Africa is, relatively, how realistic are we about actually getting significant philanthropic giving from Africa if the economic state stays where it is? And to that end, as an African philanthropist, so to the question the moderator asked, which I don't think you covered fully, if I have $1, how do I make it into 5 as an African philanthropist? And in the process, is one of my responsibilities to create wealth in Africa so I grow more philanthropists? Because just giving is not enough. You can't just give your income, because then what happens, you don't get multiple year gifts, you don't get repeat gifts as easily. It's a bit more complicated.
Okay. Any more questions at this time? Can't really see well from here, but I'm thinking we can get started, yeah?
Okay, want to go? Okay. All right, so I loved your question, and I think you're absolutely right, and certainly from CAPSA's perspective, we have mostly dealt with non-profits and social enterprises that are in the services space. I think that your point is absolutely correct. We do need to be looking at public policy and influencing that. I think it's also very tricky in terms of certainly in terms of the closing of civic spaces. And as you say, these kind of issues are, of a concern to government and business, etc. So I don't really have the answer, but I think that is where we definitely need to be heading, and we need to negotiate these perilous waters, because that's where we need to go.
Mm-hmm. Any distinction, between sort of the policy types of NGOs, which I think, if I understood your question, the ones that are oriented to policy versus the ones that sort of implement?
Yes. Yes, it's an underfunded sector, there's no question of a doubt. Mm-hmm. So I wish I had the answer.
Mm-hmm. Mm-hmm. Okay. Let's touch on, I believe it was Frank's point about, going back to I don't know what you understood. I got the quintupling the sort of investment, but there was a pre-thought there as well, about in Africa, how it's different in terms of the investment landscape.
So first of all, the data we've collected on blended finance, we've probably just scratched the surface of what's out there, but we've aggregated data on about $100 billion worth of blended finance transactions. And it's not all that simple to unravel what the leverage is, that is, number of non-philanthropic dollars leveraged with each philanthropic dollar. But our overall estimate is probably, somewhere around 3 to 5 times. And you ought to be able to reach for something more like 8 times. So again, what I'm suggesting is if you place your money with unlike money with different objective, you very well might leverage up the power of your $1 or your 1 rand by having, totally commercial money join you at a rate of, say, 5 to 1. Just to give it one example, our grant program, which is compared to the size of the blended finance issue, very small, we've so far put out the door $5 million, and this is toward very, very early stage structures or ideas that could be structures, and we've already had financial closes following us of over $200 million. That's $5 million getting financial closes. This is not promises, they're actual signed legal documents of over $200 million. That's the power of early stage intervention in something that looks like a good idea, coupled with financial knowledge. So everybody on my team comes from a transaction background, and we've got a nose for this is a ludicrous idea, or this is probably a good idea but high risk, and we go for that good idea, high risk, high leverage. So if you are strategic about what you're doing, a little bit of money can explode into a really large pool of funding. And, like I said, we're very small, and if we can do that, picking around the world, you picking in your home market with your expertise are going to surely do better than we. I don't know if that answers your question up, but I lay down a challenge to you. As people sitting in Toronto, Canada, if we can do that with our money, what could you do knowing your market, knowing your issues, knowing your challenges, and knowing your people?
Mm. And I would just add, some golden nuggets from a meeting I had earlier this morning. The 2 pockets of funds that are sitting, quite richly there. One is pension funds in South Africa, in Kenya also, where, by definition, they're sort of risk averse, but slowly are being channeled into, other funds that can have social impact. A second area, and I was quite, I was quite amazed at this, is some of the investments that were made out of BEE here, South Africa's broad-based Black economic empowerment, say in 2000, that matured in maybe 2015. They're sitting there, and investors can make some decisions about where to channel these monies. And so perhaps somebody looking for funds needs to know where to go, and it's not going to a corporate CSR, or it's not going to, a foundation, or it's not going to a donor traditionally only, but it's going to these very specific pockets that seem to be quite fat, and then doing some of that, catalytic kind of merging of funds. Okay. I see pensive faces, I see hands. Wonderful. Please. Mics.
It's on, yeah. My name is Max. I quite liked the question from a colleague from the Ford Foundation there, and I wanted to add a little bit of to it. I think the work that you're doing is fabulous, by the way, and I think you should continue investing in helping those institutions that are currently working in the public goods space. But since we're talking about, scanning into the future here, we must recognize that the way we decide value as a society is also changing rapidly. So those institutions that are currently working in the space that you're funding, our estimation is that in 5 to 10 years' time, that is going to change. They're going to enter into the formal markets of transaction. If you look at what's happening in the UK with the reform of the Common Agricultural Policy, our economies at the moment don't account for natural capital very well. So this is the stuff that you guys are funding. But my suspicion is post-Brexit, what will happen is if Michael Gove is successful, some of the services that are currently public goods will start to be transacted more formally, and they'll start attracting the kinds of funding that we're talking about. So the services that are offered by these, will start coming into, selling, and people will find it more attractive. We've not been able to do it so far because it's been a huge methodological challenge, but I think we've overcome that. At the G20 meeting in Buenos Aires this year.
Maybe just veer it to a question, yeah?
Yeah. So, this was just to say, I think that you should continue funding what you're funding, and I would urge you guys who are working in the blended finance space to look into where are our economies going in terms of the kinds of capitals that our economies will be required to account for, given that we are running out of certain things at the moment. And that includes natural capital, social capital that you're talking about, and other forms of capital that GDP accounts for at the moment.
Actually, blended finance, a lot of deals in blended finance. Let me give you some stats. So first of all, 40% of all the blended finance activity we've ever tracked is in this continent. This is not new here. It happens here. It just has never had a label. So please do not understand this as a new thing for you. You're doing it. A lot of it's donor agencies plus private capital markets. So you can own it a little better, but it is happening here. Secondly, the major areas where blended finance is happening, renewables is a major area. Ag is a major area. This is another big, speaking of natural capital, it's what made me think of it. Agribusiness, is a huge part of the economy. It is probably 80% female. It's a major area, and it's a space where blended finance is used as a tool very often. Natural capital, that is climate change, climate adaptation, climate mitigation, is also a place where you see a lot of blended finance, because it's really hard to create a revenue line out of saving Mother Earth. But if you can capture externalities, if you can find out who wants to pay for a solution and create a financial structure where they get to buy down that impact or prevent that impact, you suddenly have something investable.
Thanks. Yeah, definitely. I think let's get a nice chunk of questions going.
Sorry.
Thanks for that clarification, though. I saw hands here in the middle. Yep.
Mine isn't entirely a question. My name's Colleen. I've worked for many years in the philanthropy infrastructure area, mostly in South Africa, but in other parts of the world as well. I wanted to come in on the point of the funding for advocacy, for policy work, for social justice work raised by the Ford Foundation. I was very comforted this morning when some of the people in the women's empowerment panel were talking about corporate support, because in South Africa that just doesn't happen. It's been an ongoing point of advocacy from the civil society sector into the corporate sector. The corporate sector actually needs the civil society organizations that defend democracy and a whole lot of associated freedoms. And I think that there has to be some very innovative investment work done around how to bring corporate funding in, because particularly in South Africa, all that work is funded by international organizations. Thanks.
Much as it was comment-like, it had a question slant, so if the panel feels that they can answer that, that would be great too. Any more? Yeah, Mike, coming to you. Yeah.
Hi, my name is Wale from DNDI. My question is to everyone on the panel. What are the biggest risky areas when you consider, this corporate financing mechanisms as you described, and what sort of, how should organizations prepare to be able to sort of internally de-risk themselves to be able to be eligible for financing?
Okay. Okay, let's take those.
I'm not sure I understood the last question exactly. May I ask Max?
Wale, you want to restate
sorry.
about
So
your
what I'm saying
question
is,
about
as
risk?
an organization, how do you, what has been what are some of the inherent risks that you've identified from a potential recipient organizations, and how can organizations sort of internally structure themselves so that they are less risky and are more able to access corporate financing?
Maybe I can take that really specific one. There's always the issue of perceived risk versus actual risk in any transaction. And especially foreign investors look at something and they see all sorts of risks that actually aren't real. And if somebody who knows what they're doing goes in first and proves that the risk actually was overestimated, they're doing a great service. One of the things we see in my world of blended finance is that the value that you get when you have disparate parties in the same transaction is actually more than the flavor of money they're bringing into the transaction. When you have a Rockefeller Foundation or a Development Bank of Southern Africa in a deal, it's a signal to other people, especially to the private sector, that they can step in a country they might otherwise feel very uncomfortable in. Similarly, there's a lot of rigor that private sector money brings to the equation when it joins a philanthropic or a development institution in a transaction. There's efficiency, there's the hard-nosed decision about every dollar that goes out the door and what it's going for. So there's actually a lot of value in putting different, it's just like diversity on a board, diversity in a company's shareholding can be really, really valuable. So that's some de-risking. There's the issue of proving out a thesis with local knowledge, and then there's actually putting different people into a transaction so that you send different signals out to the community about what this transaction means. It's not a complete answer to your question, but it's a couple of thoughts for you. There were a couple of advocacy comments that I don't think I'm really
Do you have
the
any
best.
thoughts on
Jill?
advocacy?
I think that the point Colleen raises is absolutely correct. And it's disappointing that those types of issues and sectors are supported by foreign funders. Again, I think I don't have the answer, but it's something we need to look at.
There's a little shift in the right direction, I think. I mean, I'm hearing things around, impact investment and bodies coming together at national level here in South Africa across that spectrum, from, your APSA chairman to your DBSAs to your, of course, people that represent some of the BEE funds coming together to say, how can we, I mean, do we start one wholesale fund together, or do we, there's this continuum from very, very early stage to this so-called missing middle and so on. So do we draw that continuum and each take a piece? So I don't know. I'm an eternal optimist, so, but I am having conversations that, I didn't have 10 years ago in some key markets. I don't know if you're seeing this.
Yeah, back in the 90s when I was working in East Asia doing investments, it was only the multinationals who cared about their environmental footprint. If you did a deal with a multinational in Asia, they worried about their effluent quality and their noise volume and their construction dust. And your average Chinese company would just plow ahead and not worry about it. And it was only the multinationals who worried. Maybe today we're at the same moment where to have a social license to operate, the multinationals, of the world kind of realize that they can't just have a CSR wing and do something with that CSR wing that looks radically different from their personality as a company. And I suspect maybe the same pattern will emerge. Today, even domestic companies worry about their environmental footprint, no matter what country they're in and what the regulatory status is. Their license to operate depends on their ESG profile being adequate. So perhaps we're getting to the point where your social license to operate in South Africa or in any other country depends in part on how you behave as a citizen with your general corpus as a company and not just your CSR efforts. Right. So I actually would be very optimistic. If the ESG movement went from multinationals to large domestic corporates, surely the importance of the Sustainable Development Goals and the importance of being a global citizen is going to show up in domestic companies as well. The pattern should be the same.
Right.
I think I would also add my voice to the optimism. Certainly, the BEE landscape in South Africa is providing huge opportunities. It's a win-win situation. We try to tell our corporate clients, some of them who think that BEE is a grudge purchase, we're saying that you are contributing to the economic transformation of the country. So the BEE opportunities to be had in the country, there's no question of a doubt. And then, of course, also the triple bottom line. People, planet, profit. We've got the King 4 of corporate governance that is guiding us on that. And I think this all bodes very well for the country.
Mm. Okay, I see newcomers, and I'm wondering if I think it's nearly time. I'll just do a quick scan and see if there's one more question. My clock tells me our time is nearly up, and then I'll bring it together. It's up?
That's it.
No time. Zero time?
No.
Okay, no time. Bringing it together. Well, thank you so much. I mean, the panel, to you all, I hope it was useful for most of you, if not all of you. The range of catalytic funding instruments that are available, the innate behaviors that we have as Africans in terms of generosity, the bridging that educational, sometimes cultural gap between the investors and people seeking social change, and just finding sort of the piece that makes sense to the specific entity, be it a policymaker or other. I mean, I think that those are some of the issues that have been raised. Thank you so much for your wide participation, and again to Jill and to Joan.
Thank you to you, Micheline.
Thank you so much.
Thank you,
Yeah,
Micheline.
thank you all. What a photo. Oh, no. Really? No. With the group?